Mortgage demand climbs to the highest level in 5 weeks after interest rates move lower. Applications to refinance a home increased 2% for the week and were 7% higher than the same week 1 year ago. You know what else is 7% higher from the same week a year ago? My weight.
My gas.
My weight. My weight. And here's the thing. 7% higher than the same week a year ago, and rates are higher than a week ago.
Yeah.
So, and there's lots of haters. There's lots of comment. Oh, how can people do this in the market right now? How can people want to do a refinance cash out? Look, their situation's a situation.
Yeah.
If their situation needing to be solved generates a loan application, and I think that's what we're seeing here.
Absolutely. Absolutely. You know, as a matter of fact, I had a client today. She has a project in the Philippines. She needs $80,000 to finish her project, and her house is almost free and clear here. So she's like, you know what? It's hard for me as a retired woman to go out there and just get a personal loan, even though I have excellent credit, et cetera. So I might as well tap into, you know, my equity and see what we can do. So how do I do that? I'm actually suggesting just go with a home equity line of credit.
Wow. Okay, wait, hold. So she's going to refinance or take money out of her house here, and then she's going to use that money to go and finish what she's got to finish in the Philippines.
In the Philippines, correct.
And it's already free and clear. Or it's close to free and clear.
It's close. Only when I say that, it's like it's 200 and change.
Right, but I mean the values.
Like
what?
800 and change.
Oh my gosh.
Yeah. And she only needs 60. So I'm like, well, let's see if we can go 100 and change.
Wow.
That way you could really complete the project.
Okay, so right now, I didn't know you had this in your back pocket for today's show, but you know, this is a great example, a live example, if you will, of, you know, this is what generates mortgage demand, a need that is outside of a solution on the other end of the ocean over in the Philippines, that someone right here needs this, and it may not make sense on the surface. Oh, why would they do a HELOC at 12 or 10 or 14, whatever? Well, because if you don't have that 80,000 or 100,000 sitting in the bank or sitting in your cash or on your mattress, you need to get it from somewhere. And if your house has a very, very low balance on it, it's worth a lot of money. Hey, the equity is the ATM.
That's it. Hey, you know, and when it's for business, I didn't get into the particulars what she was going to generate because I haven't met her. I'm going to have an appointment with her, you know, coming Tuesday. But then I'll get that information at that point in time, just so that we understand the numbers and all that good stuff and go from there.
But piggybacking off what you said, that's a huge opportunity. Like just for anybody else listening to this that, you know, wants to start another business, wants to start a different, you know, source of income. If you can't get a business loan, because I know it's a lot tougher to get business funding nowadays, and you have a house, why don't you just tap into your equity? And that's going to be way better than you taking out a business loan. You recuperate it right back, and I bet you the rate's going to be a lot lower than if you went to the bank.
Probably so.
Yeah. Well, one of the things that I wanted to bring up about this article regarding mortgage demand and applications increasing is, you know, the claim was mortgage rates this month are not that much different than November of last year. I'm like, are you sure? Are you really sure? Because that does not sound right to me.
Yeah.
Not going to fact check it live. But I mean, guys, we were at November of 2022. We were high fives, low sixes. We weren't in the 7.5 and 7.75. This is not accurate, I don't think. And then we go on to say, so, you know, there's not a lot of new incentive to refinance. Most borrowers carry much lower interest rates due to the record low rates seen during the first few years of the pandemic. So then why the notable increase of applications? Guys, what is causing the increase of applications?
I think it's one of those things that maybe people are starting to say like, hey, well, I should sell now before, you know, I don't know what happens. So those people that either, you know, are on the fence and just are unsure because they don't know, don't have a source where they're actually, you know, get information that lets them know what is going to happen. They're probably like, dude, this is probably my last chance. I have to put it up on the market. Who knows what's going to happen next year?
And here's the thing, and it goes on to say both purchase and refinance applications increased to the highest weekly pace in 5 weeks. Both purchase and refinance applications increased to the highest weekly pace in 5 weeks.
But again, guys, we're still at a historical low.
Yeah,
but here's the thing. Here's what I look at. I go, okay, fine. If there's like a dip in the road, cool. Are we coming out of the dip? Like if this is the trough, like the lowest point of volume of activity, fine. I would love to get that in the rearview mirror sooner rather than later, and at least try to get some, you know, get some nice horizon in front of our eyeballs. So I think that's what's going on, especially if this has been happening over a couple weeks. So it's good news, and you know, hey, good news has been rare around here these days, hasn't it, guys?
It has, but I feel like overall, I mean, rates do come down, and they might just, you know, give a burst of buyers to the market. But at the end of the day, affordability, lack of inventory is still going to be a factor in the game.
Absolutely.
So it doesn't matter if rates come down, you're still going to be forced with another obstacle, which is finding the house, and then in between that time, your rates might go right back up. So it's great news, but take it in full context.
And
Correct.
You know what's interesting to me is that it's happening at this time of the year. I mean, we're coming into like what we traditionally would call a slower period of the year. But here's what's funny also. I was thinking about this in preparation for the show. I say this all the time about the mortgage industry in general. It's never been true for us. It's not like even it never has. I picked up like can you name a super quiet and dead December? They for some reason, I don't know why. I don't know if it's just us or what. Like November and December, it just gets like chaotic.
Yeah, it gets chaotic.
So in this normal time when we go, oh, well, it's kind of quiet this time of year, and the industry slows down, all the headlines say that kind of stuff, and like it's like the opposite for us, which is great as far as business is concerned, but it is a little odd.
Yeah,
not complaining.
It is exactly. We're not complaining.
Not complaining. I could get busier too.
All right. Well, mortgage rates will continue to ebb and flow as they will, guys. I think we're going to see an increase in applications, even more so going into the Christmas season. I honestly think some people are going to be doing stuff because they want to beat the tax season. They want to do it in 2023, and we're kind of getting close to the window where, like, if you don't do it now, you're going to run out of time a little bit, only because there's like bank closures because of Thanksgiving and bank closures because of Christmas and New Year. So
we basically lose all next week.
You basically have 6 weeks of the year left, but you really don't operate as if you have only 4 just because of bank closures. So.
Yeah.
All right, guys.
Maybe you have that.
Maybe, yeah.